Hey guys, welcome back to the show. Today I am joined by Ansel Linder. He is the host of the Bitcoin and Markets podcast. He also writes the Fundamentals Report, which is available on his website, bitcoinandmarkets.com. He's a strong supporter of Bitcoin, an economist, and I'm proud to sit down with him today, talk about the market and talk about what he's doing with his podcast. Ansel, thank you so much for joining me today.
Great to be here, Justin. Thanks for inviting me.
No problem, man. I'm a big fan of your work, listen to your podcast frequently. Just to get started, obviously you're a strong supporter of Bitcoin. When did you first become involved with Bitcoin or the cryptocurrency world, and kind of how did that lead you into what you do now?
Well, I started as a gold bug and freedom advocate way back in, well, my whole adult life basically, was investing in gold and silver and things. And so it was just a smooth transition. And, the early in 2011, 2012, the Roger Veres and the Eric Voorheeses, they were in the freedom movement, Pork Fest, that type of stuff. And so that's how I heard about it the first time. And I had that background. I recognized it as sound money back then, and been down the rabbit hole ever since. Kind of when I was in the military for 10 years and I got out in 2014 and kind of went all in on Bitcoin. So that's how I got here. And then I started my podcast in 2016 with the scaling debate, trying to, get my opinions out there. And this is where we're at today.
Mm-hmm. I remember those times. Those were contentious times. And, just to frame that, you were you were a pretty strong advocate of no 2x, signaling for SegWit. So that's a pretty neat segue. If we could I think a lot of people, current market participants may or may not have been around back then and may not remember what it was like or what the argument was. And now today we have Bitcoin Cash and Bitcoin Cash SV. And we have Craig Wright running around, and we have the recent law debate, and then more recently, like just a few days ago, obviously the big thing was the Tulip Trust and the bonded courier and all of that kind of stuff. So I think that's a good opportunity. Like can you take us back to kind of 2016 and the scaling debate, and just kind of refresh our memory on what that looked like and what your stance was?
Yeah, I think it actually started 2015, and there was two sides to this debate. Kind of Gavin Andresen and Mike Hearn, they were two major influences in core development. And everybody didn't really trust them because, Satoshi left after Gavin Andresen went and talked to the CIA. That's one of the things that kind of drove Satoshi away in 2010. And also Mike Hearn, he worked for Google. So that was like these two kind of maybe captured guys were really influential in Bitcoin, and they happened to be pushing the big blocks. And so that's kind of the background to how this came in. And in 2015, some people really thought, oh, we need to scale this up with transactions. This is a payment network, so we need to have payments. So we need to have bigger block sizes. But when you hard fork in a change like that, it centralizes the system. And so then there kind of grassroots other side emerged with this SegWit upgrade. And what SegWit allowed everybody to do was it took the signatures out of the block. So it kind of gave you a 2x increase in block size anyway. But it was a soft fork. So you didn't have to, you had backwards compatibility. And those were the two sides. So that you had the hard fork, big block, mega block, giga block side, and then you had the really super smart and precise upgrades, which was the SegWit side. And that was the fight. And it kind of started when Gavin Andresen merged BIP 101 into Bitcoin XT in 2015. And yeah, we just never got settled. I didn't know if we were ever going to settle it until the user activated soft fork came out. And UASF, I remember, what's that?
UASF, I remember the movement.
Yep, and I remember reading it. I was in the core of Slack and all this stuff, and I remember that dropping, and I read it. And that within an hour or two, I was like, this is how SegWit's going to get activated. And my next episode of my podcast was like, UASF is going to activate SegWit, hallelujah, and all this stuff. So, yeah, and then that happened, and the price took off.
And do you think that had an effect on it? Do you think that maybe the larger investment community or external actors that now became active in Bitcoin were watching this kind of debate over the core protocol and seeing how one side had clearly won? I mean, so I'm sure that kind of falls into multiple categories. You have people on both sides who have their the bet on their horse of which side's going to win, and then you have
Mm-hmm.
individuals just sitting on the sidelines saying, we like Bitcoin, but there's this problem going on right now. And then they saw that problem was cleared off because one side is clearly won. Let's go all in.
Yeah, I think, well, there's two sides to my answer on this. One, I don't think big blocks ever could win. I think the choice was between status quo or SegWit. Are we going to stay with just the 2012 version of Bitcoin forever, or are we going to slowly upgrade this with soft forks? And once we got this new soft fork in, that kind of helped everybody see how this was going to be built out in layers and things like that. So, kind of a clarity. People came to got more clarity of the future of Bitcoin, if you will. And also, it's a the value piece is all to in my mind is all about monetary properties, scarcity, durability, fungibility, all of these things. And when Bitcoin survived the scaling conflict, it gave people a lot more confidence in the asset itself, that it wouldn't change, that the rules were immutable, etc. And so it made it more of an investable asset for a lot of people, I think. And so that really took the price off when people saw that.
Yeah, hard to ignore the resulting very long pronounced bull market that followed following the resolution of the UASF.
Yep. I think let's see, it activated August of 2017. And
2017, yeah.
yep. And that was at like 2,900. And then it went all the way to 20,000 right after that. So there
Yeah,
was
yeah.
there was some pent up bullishness, and when that resolved, the wheels came off, and we went to 20,000.
Yeah. And it's kind of interesting to kind of look back, and hear that date, August 2017, and just remember uh what a ride that time was. Yeah, it's
Yeah.
so many things that had been building up, and the market conditions we were in and kind of what's resulted from that. I think one takeaway that I've held is the CME futures launched, obviously.
Hmm.
And you on there you have kind of two sides to the coin. Was this a classical attempt at price suppression, very similar to the gold and silver markets that we saw over the course of the 20th century? Because it's hard to deny that immediately after the CME futures launched, price moved up significantly and then moved down for a much longer period of time. But I think if you kind of look at this as what makes the most sense as far as market structure, you had this blow off top, you kind of the Wall Street psychology cycle cheat sheet, right? And you had we needed to take a breather, right? We just resolved the big block scaling debate. SegWit had clearly won, the soft fork had clearly won. You had the Bitcoin Cash community, and obviously the BCHSV community that came out of that as well. And the market needed to cool off. Everybody needed to consolidate. The market came down significantly, kind of correcting from that blow off top. And we have something like a classic Wyckoff spring plunging down to 3,500. And now where do we find ourselves? We find ourselves right back up at something of Bitcoin's median price, around 6 to 9,000. I think it's a really healthy area to be in. I've made this argument many, many times that the area, it's a wide range because Bitcoin's a volatile asset and it's in the early days of price discovery still. But 6 to 9,000 currently represents what I would argue is kind of our fair market range. This is largely what the market considers to be fair value for Bitcoin. This is why this has become the standard since late 2017 now. When we're above this level, we tend to move very, very quickly up and then correct very quickly back down. And when we're below, we tend to plunge down quickly and correct very quickly right back up. We saw that in early 2019, late 2018. The plunge, it was it was jarring for a lot of individuals, but that very steep plunge from 6 to 3,000 happened very quickly. Did consolidate down there for a while, but not as long as we did back in 2018 at 6K. And then we were right back up. I mean, we moved, the movement down to 3 and the movement back up to 3, if you ignore the consolidation period, was nearly instantaneous. It was very, very quick. So I think that for me anyways, that represents that the market overall values this as a fair market range, which is really a good thing overall if you just look at this parabolic growth that we're in. So that's an aside. That's an aside. So what you kind of
Well,
talked about?
can I add something to
Yeah,
that?
please, please.
Yeah, you can see that with the mining, right? With the difficulty adjustment. So at the bottom, 3,000, we had minor capitulation,
Mhm.
and then the price went back up again. And so I think, not that this isn't like some labor theory of value or anything, but I think the miners kind of, or the hash rate kind of gives you a good idea of some underlying fundamentals that are going on. And if they're very profitable, like I would say, I would argue that we're in a bull market. We're in a bull market almost any time the hash rate is going up dramatically. And so we can see at the bottom at 3,000, it was negative, and then just recently it was negative. And I've seen you talking about hash ribbon and stuff on your show. So yeah, I think that's a really good indicator of broader trends, you know.
Moving on to, you talked about being a gold bug and interested in the freedom movement. Obviously, being involved in the scaling debate was kind of your um, maybe I'd argue is where you kind of found your voice, kind of found your platform.
Yeah, the politics. Yep.
Yep, the politics. And then obviously you've shifted into the economics. So, what's now obviously the podcast that you run is Bitcoin and markets. And you talk about the economics and all of that. What's when did you begin studying the markets? Was that a natural progression out of all of this right around the same time? Did you have prior interest in markets or market structure and economics prior to this?
Yeah, I have a degree in economics. And so I've always been, like, in high school, I was really into free markets and Austrian school. So
Mhm.
ever since I can remember, my dad is a big Ron Paul fan from way back. And so that has been taught to me throughout my life. And I just followed that right into college and got a degree in economics. Um,
Did you, yeah, correct me if I go astray. You got your degree at ISU?
yeah, I
Yeah.
went to Iowa State, in your neck of
Yeah.
the woods there.
In my neck of the woods, I like it. I like it. People studying local. Um, so kind of prior to getting involved in Bitcoin and the precious metal movement,
Okay.
did you said you kind of studied Austrian economics. Did you have any uh, uh, experience with other like traditional financial markets or maybe the foreign currency markets or anything like that prior to gold and silver and cryptocurrency?
Well, not prior to gold and silver, but being a gold bug and investing in gold and silver, I, followed forex very closely because that type of investing, you are thinking about central banking and you're thinking about monetary policy and you're thinking about
Mhm.
all of those things, and you can see how that would be a very natural transition into Bitcoin. And so, yeah, I've owned stocks in the past. I've traded stocks in the past, just like everybody kind of does. When you just, I don't know, you like Tesla or something, you buy a few shares or something,
Sure.
and but nothing professional. I would say my kind of professional investing has always been sound money investing with gold
Yeah.
and silver and then Bitcoin. So, and that's I'm a long term holder. Like, I still have all of my gold and all of my silver physical, right? And I still have, well, not 100% of my Bitcoin, but I have most of the Bitcoin that I've ever bought. Is I still own that. So I kind of have that mindset. It's an old school mindset of savings, right? You buy this and you hold it for 40 years, and that's kind of how I approach this.
Yeah. And if we just look at statistics, it's very, very hard to beat the buy and hold strategy. And that's, anything that you consider fundamentally valuable. And that was something that, um, what I wouldn't say was drilled into me by my parents or my society. I'm somewhat of a black sheep in that sense. But that's what I began kind of pushing and, making myself understand that buy something that you believe is fundamentally valuable, and that's it. Just don't do anything. Right? That's it. Just stick to the strategy. You only lose money. You only lose money when you deviate from the strategy. If you follow your strategy, you tend to make money.
Yeah, I think it's
Um,
funny. People will pump up the stock market, and they'll say, "Oh, look, it's 9% returns for the last 100 years or whatever. Just buy mutual funds, and you'll be fine." So they have this buy and hold strategy in their mind about stocks. But
mhm,
when you talk about buy and hold long term Bitcoin or long term gold, they think you're silly. I mean, it's a
right,
really weird disconnect for that. You're supposed to buy and hold stocks, but you can't buy and hold real assets. So,
right. Which is, I think it's funny because I think one of the arguments that we're going to commonly hear, contrasting the stock market versus the cryptocurrency markets or the precious metal markets, maybe more so cryptocurrency, but obviously they're in gold, is volatility, right? Well, you could lose everything;
mhm.
it could go down to zero. And you just all you need to do when you hear that argument, to me, it really implies that this individual doesn't really understand the history of the stock market or the history of individual stocks. Go back to the early days of your favorite stock and watch
Yeah.
how up and down that thing went for the first 5-10 years. It's called price discovery, right? And then there reaches enough momentum socially, financially, and then you get that nice, 30, 40 year long bull market where there's nothing but upside given enough time, right? And the swings come down to something like, 10, 20, 30%, not 80, 60, not, this is all absolutely natural liquidity, price discovery. But yeah, I think that's obviously I think people are missing the goalpost there clearly when we talk about the buy and hold strategy. So talk about your podcast a little bit. Bitcoin and markets. I love it. Just kind of talk about how that evolved and what you talk about and where people can find it, obviously.
Yeah. So bitcoinandmarkets.com. And I started that in 2016 with the scaling debate, like we talked about. It's always been an economic show, even though we said it was political. But economics can be political, so I kind of focus on that aspect of it. Then in I would say like 2017, when things were wrapping up with the scaling debate, I kind of transitioned into more of a fundamentals aspect. So I talked about hash rate, I talked about um, uh, adoption, full node count, all these kind of economic fundamentals behind Bitcoin, and did that kind of thing for a year or two. And now getting more into the newsletter side. I still do my podcast, but I have a private newsletter and do that kind of thing. So kind of giving people an inside look at the industry and inside look at the fundamentals. And yeah, that's how it's evolved.
Hmm. And I think you're positioned in a good place to do that. Like, there's not there are there are not as many people as one might assume that have been around since
Yeah.
2016
Yeah.
that still continue to create content about cryptocurrency in a consistent manner that is consistent. And then maybe this is the qualifier that is consistent with the same value structure and
Mm.
philosophy and mentality that they had back in 2016. We've seen a lot of flip flopping, right?
Yeah,
So,
I've never shilled an altcoin. I've never
yeah.
shilled an ICO. I've only been calling them scams the whole time and kind of being validated on that.
Mm-hmm. That's my kind of idea there was you go back to 2016, you had a lot of Bitcoin maximalists. And here in
Yeah.
2020, it seems like we've got an XRP maximalists, right? It's like they
Oh
completely
man.
changed their channel. Uh, and no offense to anybody that holds XRP. You guys are entitled to your own decisions. Um, so let's talk about that for a second. So that's obviously a good place to um, well, let's get back to that in just one second. So you said that your primary strategy is buy and hold with Bitcoin.
Yeah.
Do you do any sort of trading? You said you sold. I assume I parsed from that you had sold some at some time. That's a personal decision. We don't need to go into that. But do you have any kind of maybe swing trading strategy, or is there anything that you kind of look at as far as trading?
Yeah, I'm more of a swing trader, making I would say 4 to 5 trades a year, something like
Mm,
that. And that's how I approach things. I think I overtraded in the past.
sure.
And so that is one of the downfalls of this is and I try to tell this to my listeners and my followers is you need to do your own research and really get in there and understand this stuff. But yeah, I do trade, but like I said, 4 or 5 trades a year or something.
I think that that is certainly a much better approach than the way a lot of people approach trading. This is this is obviously my wheelhouse, what I do.
Yeah.
I earn my active income as a full-time trader, and I mentor individuals all the time, and I think the biggest problem going in that people make, because it's not easy to extract money consistently from the markets. It's not designed for you to do that, right? It's
Exactly. Yeah.
designed for banks to do that. It's designed for governments to do that. It's not set up for you to do that, right? You gotta work really hard because you've got a lot of things pushing down on you. But often, I mean, the biggest problems is just going to be over trading and risk. People just need to approach the market thinking about thinking about the market in terms of probability. That's the
Yeah,
drum
and
that
I'm
I beat.
I'm
That's the drum that I
I'm a
beat.
big fan of traders. I think traders. I mean, I would consider myself a trader, but
Sure.
I think that we or they play a very important role in the market in price discovery. A lot of people get wrecked. I kind of think of it like a 80-20 principle, right? So it's a Pareto distribution where 80% of people will utterly fail and probably totally lose most of their money if they continue to trade. Just like a casino, you go into any sort of casino. But in the markets, it plays like nobody benefits necessarily from you losing money at the craps table, except for, of course, the casino owner.
Casino.
But traders, you actually benefit. We benefit. The public benefits from traders because of the price discovery that goes on. So it is definitely a valuable profession, in my opinion. And it wouldn't you wouldn't have billionaire investors, famous people like Jim Rogers or George Soros or Warren Buffett or any of these people like these really famous traders if they didn't provide a valuable service to
Hmm.
the economy. So I think it's great.
Hmm. That touches on a lot of things. Obviously, some would argue the zero-sum nature of markets. Obviously, for somebody, if I want to buy at a good price, the market is peer-to-peer. All markets are peer-to-peer. So if I want to buy at a good price, somebody has to sell at a bad price, right?
Yeah.
And overall, I think that maybe that can be dovetailed into what you were just talking about. If you view the the distribution of successful versus unsuccessful traders, something like an 80-20, those 80-20s, those 80% of traders who are getting wrecked, that does allow, I think, potentially more passive investors,
Mm.
to get a step in and buy at that good price because you've got 80%
Hmm.
selling at bad prices, right? So, and that's not a bad, it's not really a bad hit rate. You have to evaluate risk to reward, and this
Hmm.
is dealing with the buy and hold strategy. So, if you have an 80% chance, let's say, to be wrong trading, but a higher probability to be right, just buying and holding. Um, I think that sets up a good. I think that sets up a good environment for passive investors to step into the market and have a good probability to win, especially because the more potentially the more rampant the speculation. I've always viewed the job of a speculator as you know predicting future trends, picking up something that they believe is fundamentally valuable now and transporting it into the future when the rest of the market agrees, right? So anybody that purchased Bitcoin, let's say when it was $200 or $300, let's say we go back to earlier 2015 or so, uh, not a lot of the market, not a lot of the society considered Bitcoin valuable. And so anybody that bought Bitcoin then was a speculator, like a rank speculator. They were betting that in the future people will value it more, and they were right. They were rewarded for those. They were rewarded for those efforts. And just pointing out the individuals of Warren Buffett, those that creates incentive for individuals to want to step in and do this
Yeah.
themselves.
Yeah.
Yeah, it creates the excitement that want to bring people into the market. Yeah.
Yeah. And there's arguments. I mean, on the freedom side, people will look at Warren Buffett and they'll say, he's corrupt. He has an inside track on this stuff. But I mean, just look at there's a whole investment industry. And yes, we are kind of in a bubble, so to speak, of financial products and financial assets and things, and money managers and wealth advisors and all those that kind of stuff is built off of this fiat money, right? The money printing. But there is definitely room for that. I mean, you, it's entrepreneurial activity. You look at a market opportunity and you find something that's mispriced and you buy or sell to equalize that to kind of supply and demand, help the price find its level. And yeah, I think that's a very important role. But it might be the industry as a whole, I would say, is definitely a bubble at this point.
Mm-hmm. Mm-hmm.
That kind of got off topic, but yeah.
No, no, there's a thread there that I think I want to come back to after I let it kind of germinate in my head here for a little bit. Uh, but that's a good segue into what we were talking about earlier. So do you we were talking about altcoins. Do you hold
Yeah,
any altcoins?
I do. I've never bought any. Well, no, that's a lie too. I do hold like one Litecoin that was
Okay.
donated on the show to me, and then I did buy some XRP. I think it was back in 2014,
Hmm.
where XRP was the Ethereum before Ethereum, and they have
Sure.
tokens on top of Bitcoin, and so I thought it was kind of a neat idea. And so I traded one Bitcoin for all these XRP tokens, and I think
Sure.
it's gone to zero. I don't know, but I still have that seed somewhere. So I do own XRP and one Litecoin, and I own gold and silver, which I think are altcoins as well, and dollars, of course. So which I would say is an altcoin. So
Sure.
I do hold lots of different altcoins, but cryptocurrencies, I would say I only own those two.
Sure. Sure. And I think that's kind of a good segue into, kind of what you mentioned. What is your overall opinion of the altcoin market? Of We could talk about the ICO craze of 2017, the IEO craze in 2019.
Sorry, my little boy came in here.
No, it's totally fine. I have definitely had my 2-year-old come into the studio before.
So can you restate the question? I'm sorry, didn't hear
Sure,
you.
sure. I was just asking, what is your opinion of altcoins in general, the altcoin market, kind of just kind of the space, that gives us an opportunity to kind of talk about your stance on Bitcoin and where it sits relative to the others.
Yeah, I view altcoins not competing with Bitcoin really. I think they compete with layer two Bitcoin. And this is starting to become more evident with like Liquid, the sidechain has confidential transactions, so it competes with the privacy coins, and then it also has smart contract capability, so it competes with Ethereum. Lightning competes with all of these payment coins and things, and so I think all coins compete against layer two Bitcoin, um, but Bitcoin's competing to be money, and it's wanting these monetary properties, ultimate scarcity, ultimate immutability of its rules, and altcoins just can't compete on that. So they, I don't buy into the whole idea that there's going to be pluralism in the future where there's maybe 10 or even five uh, big altcoins. I think it's going to be Bitcoin is going to have 98% of the market, and then there's going to be a little 2% piece where there's people gambling on the altcoins.
Sure. Well, hopefully for the altcoin speculators out there, we talk about a very large market cap for Bitcoin. Maybe there'll be enough cheddar over there on the other 2% for them.
Yeah, I think the altcoin market cap, the all-time high, I don't think that'll ever be broken. What is it, like 500 billion on the altcoin
Hmm.
side?
Hmm.
I don't think we'll ever break that again, but we could get back up to that if, say, Bitcoin is a $20 trillion market cap someday. Then yeah, you could see maybe 400 billion for the altcoins, but they will cannibalize each other, and we see that with EOS and Ethereum and Tron and Neo and all these competing platforms. There's nothing really to differentiate themselves, and so Bitcoin will have the lion's share, and they will cannibalize each other down below.
Hmm. Do you think they'll be, do you think they'll, do you think they'll have use cases, or do you largely see, as you said, they're competing with, layer two solutions on top of Bitcoin? Do you think that we'll just eventually get better layer two solutions on top of Bitcoin? So, we'll have smart contracts on Bitcoin, on a side chain or some form of second layer solution, built directly off the core protocol. So we won't need Ethereum, and we'll have we'll have privacy transactions. So we won't need Monero, or we won't need Z Classic. We'll have tokenization, obviously. So we won't need things that focus on tokenizing property or tokenizing assets, for example.
Yeah, I think they're cool ideas, right? And just like this counterparty back in the day that I actually bought was, I mean, they're really cool ideas. These tokens, there's different ways to build incentive structures for layer twos and for apps and all that stuff. It's kind of exciting and it's kind of cool, but there's really no demand. There's really no demand. So if you look at all of the dApps built on Ethereum for like the first 4 years of its existence, it's only 100,000 maybe. It hasn't changed the world, and any single dApp or app on Ethereum might only have 10,000 daily active users. So there's just no demand there. The demand is for speculation. The demand is for money and buying and, 5xing or 10xing your investment. So when there is demand for those things, they can be on layer two Bitcoin. Um, it'll be slightly more centralized, maybe by design, but the altcoins are centralized anyway because they have to hard fork and they have backdoors for the developers, and all that stuff. So I think that layer two, when there is demand for those things, will come to Bitcoin layer two for sure.
Mm-hmm. Mm-hmm.
Does that make sense? Or
Yeah, I think that it does. Essentially, I mean, it's as simple as this: the functionality or the market that altcoins are trying to deliver to,
mm-hmm,
or create their products for.
mm-hmm,
There's not currently demand for them right now. The demand is only speculative demand to hold them and
mm-hmm,
see their price appreciate, right? So basically, you have somebody with the startup investor, angel investor mentality, where they're buying stuff, they don't even know what it is. They're just going to buy a bunch of different things, and they just want one of them to 10x, and that makes up for the other 9 losers, right? That's your typical hit rate of a startup investor.
yeah. And another
That's what.
example with this DeFi thing, everyone's talking about DeFi is going to change the world. Well, the reason why there is any uptake for DeFi is because they want to leverage their Ethereum to buy, to lever up their investment. So it's a
Mm-hmm.
speculative play. It's an investment play. It's not a utility play. And anyway, they're already building clones of Maker on Bitcoin sidechains. So I don't see how any of those things will drive demand for the underlying asset, which would be Ethereum or Ripple or whatever other coin you're talking about.
I heard, to be honest, DeFi was something that I've learned much more about recently. Still kind of on the sidelines about it, but I've been trying to learn more. One thing that I think is interesting is this idea of the whole maker, the whole MakerDAO system and DAI, and basically locking up your Ethereum to sort of hedge, because now you're holding synthetic USD, right, in the form of DAI. And you can utilize that to loan, earn interest, et cetera, et cetera, et cetera, right? And I thought, well, yeah, that sounds pretty neat. Honestly, that's a pretty cool concept. I like how they've built it. But I asked myself, I was like, how popular would that be if Ethereum was in a raging bull market? Would you not
Yeah.
make more money than just holding your Ethereum long? Would you not just make more money potentially speculating on the futures markets, and leveraging, getting a bigger bet, things of that nature, right? Is the demand to hold DAI only existent because the price is overall going down, right? So of course you would want to hedge your bets and have your USD value somewhat stabilized.
Well, you can always use DAI to buy more Ethereum. See, that's
Mm,
that's what I think of it as is these people are collateralizing their Ethereum, taking that DAI because what it's like 1.5 is what they had to collateralize, I think, and
yeah.
so then they just take that DAI and they double down on their Ethereum holdings, and they're
Mm,
hoping that it goes up, and that's going to wreck people, right? Because that works in a bull market. If you're using your DAI to buy more Ethereum, that works as the price is going up, or if it's at least stable. But if the price is dropping, I mean, that's when, uh, you know, anytime you're using a lot of leverage, you don't want the price to drop because it will crush you.
yeah. 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 And that's interesting. We could get into how the popular derivatives markets, which offer the most leverage, they're structured to favor shorts because the
Mm.
nature of our perpetual contracts, which is the most popular, whether they're talking BitMEX or ByBit or Deribit, they're inverse swaps, so they favor shorts. Shorts essentially. Well, since the launch of the perpetual swap contracts, shorts almost always receive funding, right?
Yeah,
And
yeah.
in fact, BitMEX had advertised that just come to BitMEX and short at 1x leverage, which is a neutral position, and this is an investment. You're
Mm.
loaning your Bitcoin out to somebody who is guaranteeing your USD value in return, and you're earning BTC interest from funding over and over and over and over again. I mean, it's not like it's not like it's disparate. It's overwhelmingly shorts almost always get funding to the point where you can
Yeah.
annualize the interest and calculate it as an investment, right?
Well, that works in a bear market or a sideways market, but would you would lose more than you gain in a bull market, wouldn't you, if you're providing funding that way?
It depends. It depends on how you structure your margin and how you structure your liquidation, right? Because
Mm.
if you are 1x shorting, then you just have to worry about your liquidation price, right? So you'll have less Bitcoin, but the Bitcoin that you will have when price moves up will be more valuable in USD. So again, just the
Mm.
concept is when you short, and this is how I've always thought about shorting, when you short on the BTC markets, you're taking the BTC that you have, you're loaning that to somebody. They're saying, I'll do something with this BTC and I guarantee the USD value in return. So if you're
Mm.
only looking at your USD value and not your BTC margin, it's an effective strategy to potentially earn BTC as funding, right? Because you will be
Definitely.
losing
Yeah.
BTC on your initial margin. But if you kind of view that over here, you are getting these drops in your bucket from funding, and you could just withdraw those and stick them in your Trezor, right? So it's I've talked about this a lot as a potentially kind of neat way to build up a long-term position in Bitcoin.
Yeah. That's
Because
interesting.
again, shorts always receive funding. So if you structure it correctly, you can do so with very, very minimal USD risk, right? Now, if you're concerned about your BTC margin, like you're just stacking sats, then yes, this strategy is not what you want. But if you're just worried about the dollars that you hold, the altcoin dollars that you have, then it's potentially
Yeah,
a
the
neat way
dollar
to build up
value
a BTC
versus
position.
versus the stat balance versus the USD balance. I get what you're saying. Yeah.
Mhm. And this is stuff that we get into the weeds pretty deeply on
Yeah.
with our channel. So um, let's talk about current price. We're in a pretty
Okay.
interesting area of the market. Obviously, I know this is something you've been watching. Um, so just this is how I'll kind of frame this. We were in a roaring bull market. We were in a screaming bear market. We were in a long period of consolidation. And then the Titanic sunk. We hit the iceberg, dropped down to 3,500, consolidated painfully. Almost everybody got wrecked down there, right? Because most people were trying to sold the bottom, shorted the bottom. And then April 1st came around and we went from 3 to 5K in a couple hours, consolidated a little bit, and then popped all the way up to 14,000. And we've just listed lazily down to the downside. But I would say for some traders, in an annoying fashion, because it's mostly medium-sized volatility or small volatility-sized candles just kind of arcing down. And then you'll get a random, just ridiculous pump that wrecks everybody, or people enjoy, but then just kind of lists lazily down. And now we've just been moving sideways with some people, screaming that this is the bottom, that this is exactly what it looked like at the bottom in 2019. This is exactly what we're doing right now, with some people screaming that no, this is what it looked like in 2018 before we descended into the bowels of El Diablo. So I guess kind of what's your take on this? What metrics are you looking at?
Yeah. Well, I see that. I guess when I look at it, I see the market participant structure has changed. Right in 2017, everybody was coming in and going right onto the exchanges and just gambling, and so there was a lot of retail. A lot of the volume was retail volume, and
Mm,
through the bull market or through the bear market now, I think most of the retail has been either wrecked or left, and so I see there is a completely different um, part, like the demographics, I guess, of the market is way different now. It's more long-term holders, more like professional traders, maybe even institutional traders. And so I think that's kind of how I look at it. There's a different flavor to this, and there's big whales fighting each other right now. That's why I think these Bart. I mean, you're better at the charts and stuff than I am, but I kind of view the Bart Simpson stuff as these whales trying to find liquidity in the market. They're trying to find those retail people, and they're kind of fighting each other. Um, I don't know. Does that answer your question?
Sure. Yeah, for sure. For sure. For sure. Uh, I guess, and again, don't let me pin you. Overall, well, let me segue on that. Obviously, we have a lot of reports coming out that the majority of volume conducted
Uh-huh.
for this recent 2019 bull market was USDT, was BTC to USDT transactions, right?
Okay.
And we can derive from that many market participants are not going to be, uh, if market participants are utilizing Tether, they're not newbies. They're
Right.
not retail coming in off the streets. They're experienced individuals. Because I remember I
Yeah.
wasn't comfortable with using Tether for a long time, right? And I know that new market participants would come in, students that I would mentor, or new traders or friends of mine, and they didn't know about Tether, right? It took them a year or two to get kind of like, oh, okay, I'll Tether up once in a while. Generally after the first big red candle that they see. I mean, the big first red candle. Oh, you could go to Tether. Okay, let me just try. Let's try that. I'll try that. So that would seem I would assume from that this recent run up to 14,000 was not retail. They were
Mm.
active individuals, active market participants in BTC. So I guess the argument comes down to you know uh, what is going to be the catalyst that brings in the next wave of retail, because we need that for this long expansive bullish market, right?
Um, well, I think retail will follow. I think they won't. Man, like that 80-20 principle, they're the 80% that come in. They're the laggards that come in at the end. I think that the bull market will be kicked off by institutional holding,
Mm-hmm.
taking available supply off of the market. And of course, the halvening has a lot to do with that going into later this year. What is it, like 4 months away now only?
Mm-hmm.
So I think that it's going to be mainly institutions that come in and buy it. And I mean, we can go on a tangent about whether that's a good thing or a bad thing that the kind of whales of the traditional market are going to be whales of the Bitcoin market too. But that's
Sure.
what I see. I think I see the the next bull market being driven by institutional investing.
Yep. Yep. I mean, I agree with you. I agree with you. It's kind of an interesting thing. That being the case, eh, Bitcoin, I would almost say that on one hand, you talked about whether we like that or not, and that's absolutely true because we have a strong libertarian bent, kind of a strong anti-traditional market bent, anti-banking bent. Most individuals in the Bitcoin community. But the other thing is, if we're going to have that libertarian bent, money talks in libertarian communities, right? It's a free market, right? If individuals want to step in and be the speculator, we mined all the Bitcoin. People had to make the decision to sell to these individuals, and they chose to do that, right?
Well,
And
absolutely.
also,
It's
there's
it's the sorry to interrupt. It's the Peter Schiffs of the world that hurt libertarians more than anything. I think
mhm,
because yes, he's sold them gold, and gold is good relative to fiat money, but I mean, he's kept people out of Bitcoin, right? And
mhm,
so a lot of there is a big divide in the libertarian side of the house here that gold hating on Bitcoin, and then people that have transitioned over to Bitcoin. And I wish, like, man, I wish all the gold bugs would have been right. I mean, I am still kind of a gold bug, and I wish they would have seen the light on Bitcoin, and I wish they would accept it and come over here. I wish the Austrian School of Economics would all see the light and come over here, but they still hate on Bitcoin. So they had their chance. Um, and now it's time for the people like the institutions that see long-term stuff here, Fidelities and the Yale and all of these big endowments. They're starting to get into this. So I think it's these big players that even if they make a 1% position in Bitcoin, it's going to blow the market out.
mhm. That is, I mean, that's absolutely correct because we're talking about 1% of an extremely large amount of money, very large
Yeah.
amount of money. And I try to tell people all the time, when people, especially from the long-term perspective, and people worry about volatility and upside downside in Bitcoin, I tell them you have to look at the illiquidity of the market compared to pick something, right? Gold, pick any stock, pick a traditional stock. You can't compare the volume. You can't compare the liquidity, right? And the more market participants there are, the more investors there are, the more liquid the market becomes, and the less volatile price movements become. And typically, the more directionally biased movements become. That's what I've
It's
noticed.
a interesting thing that I don't know. It's people look at it as a payment technology or as a savings technology, kind of. And I think the savings has to come first. And so a lot of people, when they think about retail, or we need to this egalitarian Bitcoin needs to help the little guy and stuff. Um, uh, that's a payments mindset. The savings mindset is the big savers of the world, the ones that save a lot, and they have a lot of the capital of the world. They need to adopt Bitcoin first, and so
Hmm.
they will be the ones that push us on the next thing. And you've probably seen the charts, or you probably talked about them on your show, where the smooth kind of uh, well, it's the log chart that kind of tapers this way. So
Hmm.
each cycle is a little bit smaller than the previous cycle,
Sure.
and I think that's going to get blown out one of these days. We're just going to pop to the upside. One bubble is just going to take us 1,000x. I mean, we could still go 1,000x from here on Bitcoin. We could go
Hmm.
almost. I mean, it could go a lot higher, and that's going to be driven by the institutions.
Yep. Yep. I mean, the big thing here is what do individuals or what do the large savers of the world, as you said correctly, where do they want to hold their funds?
Right.
Because we're moving into a climate of extreme political instability, right? Where the United States has had a dollar hegemony. We have the SWIFT payment structure, we have the petrodollar, and largely the petrodollar is becoming a thing of the past, and SWIFT is being highly criticized by the European Union, our what should be our most ardent um, what's what I'm looking for allies, in the United
Partner.
Nations,
Yeah.
Eurozone,
Yeah.
yeah, and then you have the rising powers of Russia and China. China moving forward with their digital yuan. Russia, I mean, so over in Russia, they are investing so much into blockchain and blockchain technology right now because they want this cryptocurrency technology to do for their economy what it's done for Vitalik Buterin, basically,
Yeah.
right?
Yep.
Yeah,
Yeah. I think so. The people that say, what is it in the United States? It's only half the people have $400 to meet an expense.
sure,
So most people aren't savers. Most people aren't even have that mindset. So they're not even going to want to invest in Bitcoin. Like, why are we trying to target those people? We should target the
sure.
people that have this savings mindset, that have this investment mindset. You have to get that. Like, this should be very attractive to these big institutions and these professional people versus the little guy. Yes, the little guy needs help, but guess that they don't have that thought process. They don't even think about savings in the first place. So why would they ever think about savings in Bitcoin? It's a little bit weird to think those are the people we need to target. So
It's almost like there seems to be this thread of, okay, who do we need to bring into Bitcoin the most? The people who are the worst at money. Yeah, get them in.
yeah,
Get the
yeah,
people in here
exactly.
who are the worst at money. Yeah. I think you have a very interesting and good argument there. Is that no, we need to be actively targeting the money, right? Because
Hmm.
if you get the money in, the whole thing here is, I think, is this, and this is what contrasts Bitcoin from anything else that people throughout history have wanted to get people to pour money into, right? Bitcoin is a good system. Like it doesn't need to be changed fundamentally. But the way it was
Hmm.
constructed works really good and is fair, right? Um, so it's sound money. It's a secure and strong payment network, and it allows you to have non-fungibility of your funds. All of these things that we want, right? So the infrastructure is already there. The infrastructure is already good. We're not asking for you to invest in Bitcoin so we can make it better. We're not asking you to
Right.
participate in the Bitcoin ICO so we can build something. No, we already did that. We already have this strong, secure, decentralized, distributed payment network and sound money alternative. So let's just get the money in here, the big money that will make number go up, which the small individuals, the retail investors, they will become excited by that, begin putting their money in there, and that will benefit them. So I think the
Yeah.
argument of we need to get retail investors in to help them for reasons. Well, no, I think that right now, without the large money in Bitcoin, you may or may not be helping them, right? Because
Right.
investing in Bitcoin right now would be speculative. And so you need to expose yourself to that downside risk. Anybody participating in Bitcoin right now needs to understand that they are still, even with Bitcoin's price at this stage, still in early stages of price discovery and development. So you are making a speculative investment, and you need to assess that with your own personal risk and how you diversify your funds. Whereas once all the big money has come in and Bitcoin is largely, let's say, a stable price, very high market cap, well, now it's sound money and it's deflationary. So now at that point, then it's valid to say, yeah, retail, put your money in Bitcoin, very low risk. You're not going to see your savings eaten up. You just see your values stay stable. It's going to be totally good. Get off the dollars, man. Right now, I think that people making that argument are not doing so in direct right now service to retail investors because they're
Yeah.
beating the wrong drum
Yeah, exactly.
at the wrong
Sound
time.
money or hard money will benefit the world. It will benefit the little guy. But
Mhm.
what's the best way to bootstrap this? It's not to get the little guy. What best way to bootstrap it for the little guy eventually, for everybody eventually. Everybody will benefit more from a sounder economy with a Bitcoin standard. So we need to target the people that can make that happen versus the guy on the street. So yeah, I think this is a really interesting conversation that kind of breaks it, or it's very specific. This is why we're all here, kind of thing. So yeah.
Mhm. Yeah, what's interesting is I'm really glad we got to that because I can't even remember hearing anybody put it like that, and it made so much instinctual sense in my mind. So yeah, good on good on you, man. Thank you.
Boom.
Uh, let's, all right, let's talk real quick about the Lightning Network, something you're pretty passionate about. Where are we at with the Lightning Network? How do you see progress developing over there?
Man, it's going really well. It's kind of similar with my altcoin debate, or my altcoin point was, when there's demand, it will be built out, right? Or it will come to Bitcoin. Same with Lightning Network. It's a slow growth, but it's steady. Some of the numbers that we see on those public websites where they measure all the nodes and all the capacity and things, those are way underselling, I think, the Lightning Network, because a lot of it's private. Um, and the technology itself is getting really rock solid. Lots of things have been added over 2019 to the software itself. So it's really getting built out well. And when the demand comes, Lightning will be ready. See, that's we can't like push and create demand out of thin air. So demand has to just come from the market. Maybe there'll be a few little apps here and there that get some kind of attention, and then one day it's going to be like there's a ton of demand, and Lightning will be ready. So I think it's getting there.
Yep, good stuff. I've talked about, the continual node growth, the continual on channel transaction value. This is all stuff that you
Hmm.
go over in your podcast, as I recall, and in your fundamentals report, things like that. You kind of
Yeah, I
track
used
these
to
metrics, and
follow.
as you said, but
Yeah, I used to follow it much more closely until they a few of the implementations added the privacy by default.
hmm
So
hmm
then it became real hard to track it. And recently, what I've been doing is going onto like Android or the Android Play Store and the iOS store, or whatever, and looking at the download numbers, trying to
yeah,
guess
yeah.
the download numbers and stuff. And man, I mean, it could be as high as 5x those public numbers or 10x those public numbers. It depends on
hmm
how you calculate it. And a lot of the downloads, like Zap Wallet, has 25,000 downloads,
hmm
but the
hmm
public node numbers say that there's only 10,000 nodes out there when that one app has 25,000. So those are drastically underselling it. And of course, then you have like Casa or Nodl, some of those plug and play nodes, and they have. Um, I know Casa has sold over 2,000 units. Nodal probably similar, and so you have all of these plug and play nodes that have Lightning nodes in them, and if you just count all those, it's almost 10,000. So, like, it's those public numbers are drastically underselling the Lightning
Sure.
Network, but it doesn't really matter. I think it just shows that there is constant development and there's constant progress forward. And when the demand comes, it will be crazy. Just think, what's the capacity? The public capacity is like, I don't know, say 200 bitcoins, or maybe it's 2,000. I don't know off the top of my head. But if the price of Bitcoin 10x's, the capacity of the Lightning Network will 10x,
Right.
and then it it will be able to service business and things like that. If the capacity of the network is $10 million equivalent, there's not very much room for businesses to be built on the Lightning Network. But
Sure.
if the
Sure.
capacity is $1 billion, then these smaller startups and things, they can start targeting Lightning Network apps.
Hmm.
So again, the price comes first, the space, the market cap comes first, and then Lightning will follow. That's my kind of mindset for this.
Yeah. And I think we need look no further than um, 2018, right?
Mm,
The price of Bitcoin went up dramatically and then started coming down. The price of altcoins then went up dramatically. And I think that that's largely just all right. Let's get all the Bitcoin we can out of this. It's been fun, guys. Moving on. Um, and then, but what did we see then throughout all of 2018? ICO, 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 right? The demand
mhm,
was there, right? The demand was there. The number went up, and then all the products and services flooded into the market. I mean, how
mm.
many whole blockchains were built in 2018, right? Like I
They
think
were,
that's kind of similar. How many blockchains were built from the inception of Bitcoin to, let's say, the mid 2017?
mhm,
Maybe a couple hundred. Maybe I'm underselling it here, but let's just say 2 to 500, right? So
yeah,
okay number. How many were built in 2018? What?
thousands. Yeah.
Thousands. Yeah.
Yeah, that's a good point. The market cap attracts innovation. And
Mhm.
so, same with Lightning, the market cap, or the market cap of Bitcoin will go up, the capacity of Lightning Network will go up, and that will incentivize this innovation within the Lightning Network. So, I think we're very healthy. I mean, the bottom line is the Lightning Network is very healthy. It right now, no, it's not end all be all right now, but it will be there for us. I'm also excited about the side chains like Liquid and RSK, more for mm, like showing altcoiners that there is a place to be over here on Bitcoin.
Mhm.
Like if you're really interested in privacy, well, Liquid has confidential transactions, and you can build stuff on Liquid. It's not totally permissionless, but it's ready for you to come and build, and then you don't have to worry about keeping this blockchain going, right? You don't have to build your own blockchain, you don't have to build your own network, run all the nodes, make sure your developers are happy and your investors are happy and all this, because then you can just dial in on your product. And you
Mhm.
build that on Bitcoin, you dial in on your product and leave the consensus and leave all of that other expense to the Bitcoin network. So that's the pitch to these
Yeah.
altcoiners.
Come develop on Bitcoin. We take care of all the sticky stuff. You can just
Yeah,
focus on what you think is neat, right? Without all the excess.
yeah.
I
Work on your product. You don't have to have a blockchain. Just work on your product on a side chain, and you're good to go.
I'm going to put that on a t-shirt. I'll try that at the next San Francisco Blockchain Week event. Uh, all right, so let's I got just a couple more questions here before we kind of
Yeah.
wrap up. All right, one thing is, what are your thoughts on running full nodes? I think that's something that people don't talk enough about here in the Bitcoin space. So where do
Hmm.
you kind of fit on that, and what's your recommendations to individuals who want to be as secure as they can in this Bitcoin game?
Yeah, I have a lot of experience with getting people set up with full nodes and things. I think it's very important. Um, I think everyone should know how to do it. It's going to be like one of those basic skill sets that everyone should know how to do in the future. Everyone should know how to make a web page. They should know how to read some HTML and things like that. And they'll also need to know how to run a full node. Um, so I think it's very important for the entire network health. But I don't know. What was the second half of your question? Sorry, I forgot.
Just recommendations for individuals that are, wanting to set up full nodes or just
Hmm.
holding Bitcoin so they can be as, safe and secure in this industry.
Yeah, well, a good idea I would say is people upgrade their laptops every few years. They should just hold on to their old laptop and use it for a full node. That is a really good way to go. Bitcoin consciously keeps, or the development has been very conscious towards keeping node nodes small. So there's not a lot of bandwidth needed. There's not a lot of CPU needed. So an older laptop would be perfect for it. You can run these nodes on Raspberry Pis, right? So um, that would be a good solution for people to do. Um, that's what I got.
Do you recommend a particular client or implementation of the core protocol?
I would just run with Bitcoin Core.
Mm,
There's other, I mean, there's some others out there, but Core has like what 95% of the network, and
mm.
so you have to just kind of you'd have to study that on your own to see what you would want to dabble in. There's other things like light clients. Electrum is not a full node; it's more of a light client. And
SPV, yeah,
what's that?
SPV, yeah.
Yeah, that you can have on your computer, and that would be a good solution for people. Hardware wallets, of course. I mean, everybody that owns, I would say, $1,000 or more of Bitcoin should definitely have a hardware wallet. You should never keep anything on your phone or anything like that. If you do, I mean, you'll have to look into that because Lightning, you can have Lightning apps and you might have spending money on there, like say $100 on a Lightning app. And in the future, there'll be ways to balance that with your full node versus your Lightning balance. And but that's coming, and it's not super user friendly yet. I haven't used the Lightning Network myself a ton, so that will come. Just people need to be educated on some of the basics, so like how to how to download a full node and keep it running. Maybe upgrade it, right? Because when these upgrades come out, patches will come out, and you'll need to know how to upgrade it. So
Mhm.
it's a learning experience. I also wouldn't recommend keeping too much money on say your full node. I would never keep your whole like let's say you're running a full node on an old laptop. I would never keep all of my Bitcoin on that laptop. You have to have a hardware wallet to back that up. And so yeah, that's what I would suggest.
And I agree with everything that Ansel said for anybody watching this, and I do think that that's very important. I run Bitcoin Core. I've used Armory as a great implementation for cold
Yeah.
storage, and your suggestion to, kind of the way I run it is I have got like 15 old laptops sitting over here. You know what I mean? And one of them runs a Bitcoin Core full node. The other one is an air gapped offline laptop where I have Armory. And I have Armory on both, but I created my created my private keys on the offline air gapped computer. I have the watch only wallet on the online Armory implementation. And anytime I want to make a BTC transaction, I just, go over there and do my little USB air gap procedure. It's very, very
Hmm.
simple, very, very easy. I've recently, last year, I got a Ledger Nano X and, began accumulating a stack on there as well. And yeah, I mean, just the basics that people need to do. My biggest thing is don't keep your funds on exchanges unless you're actively trading. This is the beauty, in my
Hmm.
opinion, of derivatives, right? The ability to use margin. You want to trade Bitcoin? That's fine. That's what I do. But you don't gotta deposit all of your Bitcoin to the exchange to trade. You can utilize margin, right? So you can
Yeah.
deposit, let's say, a third of your Bitcoin, use 3x leverage, which is pretty responsible, and then keep the other 2/3 in cold storage. That limits
Mm.
your downside. So let's say you're completely irresponsible and you get wrecked. Well, you only
Yeah.
got wrecked 1/3, right? Instead of
Yeah.
3/3. I think that's a good way. I think people should utilize that to the best of their ability. So, we've been going for an hour, my friend. I think I'd love to have you back. This is a great conversation. I'm really pleased to talk to you because, we get into some good topics here that I think a lot of people are going to be sleeping on to their detriment. So let everybody watching know again how they can find you, how they can support you. Obviously, you're over there on Patreon.
Yeah, bitcoinandmarkets.com is my website. I have all of my podcasts will be there. You can find where to subscribe to all those there. Have a YouTube channel, of course, and have a Patreon that patreon.com/Bitcoin and Markets. Put out member-only podcasts and also newsletters. So that is a really good way to find me. Just go over to my Patreon, and if you become a member, you'll see all the stuff there.
Good stuff. And again, guys, I'm a big fan of his podcast. It is good stuff. There aren't a lot of people doing what he's covering. So we've talked about this before. I have, at least, with if we're gonna self-regulate our industry, then we need to self-regulate. And one part of that is supporting good people in the space. So don't sleep on this, guys. Definitely go check out his public podcast. And if you like what he does, go check out his Patreon. So.
Yeah, thanks for having me, Justin. I am very impressed with your guys' production and your guys' shows that you come out with all the time. So keep up the good work, and it was very fun to be on. Very good conversation.
I really appreciate it. Ansel, make sure to come back, my friend, and best of luck with Bitcoin. Same with all of us, and with what you're doing with your production, because you're a good content creator, and it's good to see that in the space, my friend. Thank you so much for coming on the show.
Thanks.
Cheers.